Well, several ships have been struck in the Strait of Hormuz. Shipping companies have told their oil and gas tankers to drop anchor, bringing shipments to a halt. Around 200 tankers have stopped their journeys in and out of the region. The strait's narrow passage offers few points for safety. Insurers of the ships are asking for high rates, and some are reportedly trying to cancel contracts due to the conflict. Well, the largest concentration of ships at anchor has formed off the northern coast of Oman, which is just east of the strait. Other tankers are near the port of Dubai and off the coast of Kuwait and Bahrain. You see, 20% of the world's oil normally flows through the Strait of Hormuz, and oil jumped 13% in early trades in Asia. That is the biggest rise in 4 years. Before paring back some of the gains, Asian stocks have fallen slightly. Let's find out more about this. We can speak to Jack Barton. Joins us now from Seoul in South Korea, keeping an eye on those markets, and tell us how they've been responding since opening.
Across most markets, there's been a slight or modest fall today, the exception being the Shanghai Composite Index. But the trend we're seeing is really the same. Anything related to tourism, travel, airlines is selling off. A Singapore airline down about 5% because of that increase in the benchmark Brent crude that you just mentioned. And really, for the same reason, any energy-related stocks rising on the prospect of the price going even higher. Some analysts saying crude could go above $100 if this conflict is prolonged, but also defense stocks rising. And that's why in China we saw the Shanghai index going up slightly, that combination of energy stocks and defense stocks. But even Japan, Mitsubishi, as well as Kawasaki heavy industries, which are related to defense, also rising. But the big concern here remains oil. According to US statistics, more than 80% of all the oil and gas passing through the Strait of Hormuz is destined for Asia, with China, India, Japan, South Korea accounting for almost 70% of total crude oil passing through the strait last year. And Japan, 90% of its oil comes from the Middle East, and this is critical for transport, for energy infrastructure, industry. And so Japan, the government there has been issuing statements over the weekend, today again trying to reassure the public, talking about stockpiles, but also calling for a diplomatic solution that will draw this conflict to a close. And we've heard similar statements here from Seoul, with the government trying to reassure people that there is a 7-month supply of oil stockpiled here if the worst case scenario, and there really is a shortage. But also saying an emergency fund worth $69 billion has been set up in case there is excessive volatility in the market. The government vowing to respond if there is that volatility caused by a prolonged conflict.
Yeah, the Strait of Hormuz, a key economic corridor. Jack Barton in Seoul, thanks very much.
Don't miss out. Get the full picture. Subscribe to Al Jazeera for reliable news, expert insight. Like, share, stay ahead.